Monetary policy is a blunt tool, and certainly it's a blunt tool for working on income distribution. But the first order thing I would say that we can do for income distribution type concerns is make progress on economic growth and unemployment. Obviously, unemployment almost by definition is something that affects people at the lower end of the income distribution. So, to the extent that the policy has some potency, I think that's extremely important. The other thing, implicit in your question is the absolutely correct premise that at the lower end of the income and wealth distribution, there's less stock ownership. Of course, there's also more borrowing. So if you just look at the demographic data, people at the bottom of the lower of the income and wealth distribution tend to be on net borrowers rather than investors. So while they may be losing on the one hand by earning less interest in their savings account, they're also paying less interest if they've been able to refinance their mortgage. And even, I should say, even with the difficulties in mortgage world, auto loans have become much cheaper, have become quite broadly available across, across the income and wealth distribution. Small business loans. So again, if you take the sort of broader perspective where you look at both sides of the balance sheet, I think it doesn't sweep all these things under the rug, but I think gives you a somewhat different picture.